And there we go. Officially welcome out uh, to the Market Watch Group Weekly Market Prep. I'm Scott. I will be your host. Here are our disclaimers. Be careful. We're not advisors. We're not brokers. Here's the agenda. Market posture first. Economic calendar. We'll maybe do some searching. I think the watch list is holding up, quite honestly. No pitcher. Oh, shoot. Shoot. Thought that I had turned that on. Sorry, guys. Sorry. Now pitcher? That's my fault. Morning, Greg. Good to see you. Here's the disclaimers again. You heard me. There we go. Watch list maintenance. Sandy, you know the rule. See something, say something. Don't see something, say something. No, that doesn't make sense. I guess we need a new rule. Because in that line, it would be don't see something, don't say something. All right. We're on. I think early week shopping list. I'll tell you right now, I will be reluctant to put anything on early in the week without a consolidation. We're overextended. We're overextended without volume. We're overextended without a lot of news. We're in context of a market that cyclically, meaning according to the history of the last 20 to 25 years, really tends to go. So like last year, we had a good year, or a good summer. May, June was good. July was good. But it's a little more iffy right now with the Fed and our reliance on what the Fed is going to do with monetary policy. So, yeah. How has it been? Have you been trading well? So that's the first question. Like, when I say trading well, meaning are you following your rules? Are you sticking to the plan? Second part of that is the plan working? Right? Is the plan working? Now, if the plan is breaking even, I'm okay with that, right? If you're ever like in a market where you're thinking conditions have changed a little and I'm breaking even, great. We're just dialing in still. If we're losing money, then we want to be thinking, am I overcommitting too soon? But I mean, it's gone pretty well, just less for me, right? I don't have big expectations right now. When we had our market in January and February and March and April, and our posture was a six, I had big expectations, right? Like big expectations. Let's go. Let's push. And then all of a sudden things start drying up and you're like, whoa, Nelly, slow down. Um, Sandy, thank you for sharing that. Rookie mistakes. Write them down. Write the ones that you feel like. Go back to the top 10 trading mistakes document. Pull that one up again. Find what you're doing there. See where it's rooted. Um, right? This is it's but I love that you're willing to share that because that's exactly what happens in a market. Mistakes are easier, right? Remember, and I don't know if I've talked about this for a while, but if you go back and you look at the top 10 trading mistakes, one of them is over trading. Over trading. And people say, well, how do I know if I'm over trading, Scott? How do I know? My answer is this: if you don't know that you're not over trading, there's a very good chance you are. And you're like, I don't know. I don't know if I have that dialed in yet. I get it. That's why that becomes part of what we're thinking. Am I over trading? How often do you ask yourself that question? Am I over trading? Is this right? Is this the right amount of trades, the right amount of risk? And so, one of the things I look at as I assess posture is the propensity of market conditions to overtrade, right? So if I'm in a market with a -2, yeah, that's an easy market to overtrade. You will get kicked around. Right now, we've had a market with negative momentum. Our posture score remains positive, but it has deteriorated. So negative momentum. Even though the market posture is still positive, the fact that the momentum is deteriorating is enough to say that yes, these are more difficult conditions. Therefore, it's easier to overtrade. This market has a greater propensity. Therefore, that's why my risk levels are down. Right? Let's take less risk. Second, thank you for sharing, Greg. My timing seems to be off. Yeah, in a market that seems to be transitioning, and it's not like I think it is. We see it. We can talk about the things that we've seen. We can talk about the drop and the increased volume on that drop. Right now, all of a sudden, yes, for me, we got more buying than I was expecting. It didn't come with any volume. So you're like still thinking, is this a mystery? Where's this volume coming from? What's the news? Was the inflationary data phenomenal? No, it was okay. Right? So yeah, it puts us in kind of a weird place. I get it. Timing off is definitely one I would expect. And my timing's been off on a couple of trades. And it's not that the timing's off, it's just that things sort of fell apart. Right? Like you're like, I thought it was going to go. And then it just didn't. And it just like, so yeah, I appreciate you sharing that. Good morning, Michael. Good to see you. Always hard to learn something new. Have a little patience. Yeah, right. So it's an interesting thing, because oftentimes when you come to trading, where you're coming from, you're an expert or close, right? Where you're coming from, you've been for years, you know what you're doing. And when we start something new, we have a desire to be at the level that we do other things at, right? And I agree with you, Stephen. Let's give ourselves some time, a little patience. Don't be too hard on ourselves. That's why we make sure that when it comes to our risk levels, we set them at a point, at a level that gives us that ability. Um, it's an interesting psychological concept called situational performance anxiety, right? And the example that I use, so I'm like, think about basketball and shooting a free throw, right? And you have a guy and he's in a gym, church gym by himself shooting free throws. 10-foot hoop, 15-foot distance, right? And then you move to a preseason game. Still doesn't mean that much. And then you move to a regular season game. And then you move to a championship game. And then you move to a championship game and you're down 2 points. And if you don't make both of these, you lose the game. It's the same, right? Same 10 foot, same 15 length. But that shot takes different meaning as you move through the context of it, right? And that's what I want to be thinking about in terms of my trading. What is the context that I'm setting? I'm glad you brought that up, the mistakes, Sandy, because if you go to that top 10 mistakes, I think the first two are the ones that we should be talking about, which is setting expectations too high too soon. And really that could be setting not just like as a new trader, but anytime. What are your expectations for this market? What are your expectations of yourself right now? And what kind of a context are you putting, and with maybe without realizing it, what pressures are you putting on yourself? What's a learning curve to be comfortable with? Great Lynn says. And also welcome to Glenn. Good to see you, my friend. Glenn is going to be with us tomorrow night, with us on Tuesday night. Amazing trader, amazing coach. We are very, very lucky to have him moving in and joining us. So I'm excited, and I told him that I may or may not be able to attend in the meet and greet tomorrow. He's like, look, it's probably better without you, Scott. No, he didn't say that. He thought it. So what is the learning curve? It's so funny that you put 6 months, because if I had to talk about mine, I probably would have put 6 years. But I learned a lot through trial and error. And I think that, yes, within 6 months, you can get to a good place with a lot of commitment on this thing. Because here's the thing, 6 months with what we're doing, Gray Lynn, if you give yourself a full 6 months, that is 3 passes, 3 full cycles of your trading plan, because we do one a week. If someone came in And if they watched the videos that we have, and if they were willing to kind of go in and help build that foundation of, we have the trading foundations, the options foundations. If you put an hour to 2 hours every week on your trading plan and you cycle through it, at the end of 6 months, you will be somewhere you never could have imagined. And if you weren't where you wanted to be, you would be close enough that you're like, oh yeah, there's no way I'm not going to keep going here. I see the lights. I see where right? That's what I would say. My expectation is that I should be doing better than I am. I understand. I understand. 100%. I do see the light, and that's what's important. And it's funny, and I love that we're sharing this, and this is a great starting conversation. I'm going to have to go fast when I do my market posture. This is why section 1 of our trading plan is so important. This is why it's so important. It's the why, the motivation, because Glenn will tell you, and I will tell you, that trading can take you dark places. I've seen it in my coaching. I've seen people that I've traded with that it can really, we're talking about your money, your hard-earned money. It can take you dark places if you don't really set yourself up preemptively to not allow it to. So that's why we really emphasize risk management so emphatically, that we don't allow our drawdown to put us in a place that we cannot recover, that we don't allow the pain that we talked about of losses to overcome us. It's so important that the foundation's in place for us to allow ourselves to be successful, because, right, how long did it take you to be an expert at what you're an expert at now? Right? How long did that take? And then just kind of, be patient with that, because it's worth it, because the challenge, because you can protect yourselves even as you learn, and really, and this is the right place to do it. I hope you believe that too. Okay, let's get in. I've been yapping too much. I don't know what's wrong with me today. Talking too much. That's my fault. Let's posture up. Here's where we were, okay? And we expected this. So we dropped, and then we stabilized. Right at the end of April, we're like, okay, we finally stabilized here. This week we went from a 2.75 to a 3. Last week we popped up a good amount, 0.75. Stephen, I know. Just know that I know. And Stephen knows that I know that I know. Okay. What's the date? 5/19. Okay, that's what we're looking to do now. Long term. Now, here's what's interesting, okay? The long term is a tough one for me, because I'm like, wait a second. Does this, are we in the right place? Long term. Strength of trend, right? That's what we're looking for. Strength of trend. I mean, remember that it's so funny that our posture decreased, and then you look at this and you're thinking, these are 4 of the strongest weeks strung together that we've seen since probably right here when we bottomed out. So I'm big on patterns, right? And the pattern, where's my drawing tools? Let's get to this. So all of a sudden I'm thinking, well, wait a second. Now, is there a re-emerging bullish pattern that is gaining strength? And our posture is obviously going to help us decide that. It puts us in an interesting place, in my opinion. But I was saying this step 1 looked not just similar, but actually worse than this one. And I said, yeah, if we can't get back like we didn't here. But all of a sudden we did. We got through it. And so it's like, wait a second. Are we now thinking to ourselves it's starting to break? Even though it wasn't as big of a consolidation, did we break the consolidation? Yeah, I mean, at the end of the day, right now, our trend looks basically like this, right? This sort of is what we see. And when I look at that right there and I think, if 2 is the highest, that's a 0. Where are we now? Where's my spreadsheet? 1.5. I think we have the right score. That's a 1.5. Could it get a little better? Yeah, could. I don't think there's anything going on that would make me think I need to change it. There's nothing to lower it. I'm glad we never lowered it because we said there's nothing that we would there's nothing that would make us think that this trend ever in this situation here, we never broke trend. That's what we've always said. So what do you guys think? I'm staying 1.5. What's your long-term score? How are you assessing the current long-term trend of the market? And then I'm going to move down to the short term while you're putting that in. So my score is staying the same. Michael says same. It's strong. It stayed strong. It held up. Short term. Okay, so same thing. Short term score. Obviously, the short term is a little bit harder, but we never dropped, even when we had this, we never dropped our score lower than a 1.25. No, we did. That's a lie. We did. We dropped it to a 1. And then when we increased it to a 1.25 last week, and here we are at a higher high. Definitely another quarter of a point for me. Now, at this point, if this becomes our new short-term trend, let's just say it looks something like this. I would actually say that is a 1.5. That's not that strong of a trend. We've seen stronger. We can go back and see it. It is uptrending. Again, I feel like our posture did well to never go more than that. But I feel like where we are right now, where I am right now, I say we, 1.25, I think a 1.5 makes sense. We had a higher high. The buyers achieved a higher high. That moves it up a little bit. And a 1.5, I think, is definitely in that vein of representation. Where are you? What are your thoughts? Does a 1.5 make sense? Okay. Let's keep going. Michael says yes, 1.5. 1.5 for Stephen. Not sure. Oh, okay, Sandy, are you a little more bullish or a little less? Let me know your thoughts. Okay, let's go look at volume. So far, as trends go, everything looks fine, right? Let's take a look at the 1 month daily. Now, here's where it gets interesting. Because it's so stale that it disappears on Monday. So I'm not going to count that. So that means that I really only have 2 days. 2 days of negative volume. I've got one that was close, but it wasn't above average. We had average volume. Average was 72. We got 72.7. It was 1%. 101% volume. That was it. And then over here we got, again, same thing, 102%. So the buyers haven't had any kind of breakout volume. And I have 2 sell days and nothing else. So it's still in favor of the sellers, but barely, and it's gotten better. So I am actually going to raise another quarter of a point, and I'm going to go back to 0. So I'm going to say volume is a 0. What does that mean? That means that now volume is neither contributing nor taking away from my current evaluation of the market. It's not informing me. What I think is that this last, where's my chart? This last little bit here where there was a little bit of above average volume is no longer meaningful. Now, so I'm a 0. I'm a 0 on volume. Remember that I like to do the smell test with volume. So if I said I'm a negative number right now, what I'm going to do is I'm going to start over here and I'm going to draw my line, and then I'm going to start over here and draw my line and say, where am I? That's what we've done in this 22 days. So I say I'm a neutral, I'm a zero. It doesn't help or hurt. Can the market go up without volume? Absolutely. Sure did already. So I'm gonna say, yeah, I feel good about that. If I was actually a positive number, if I was like, I'm scoring this positive, I'd be like, well, I don't see how you're doing that when there's not a single candle, not a single candle with above average volume that's also bullish. You can't find it. So I don't see how you could be positive on your volume. But at the same time, if you're negative, what I would say is we keep it at 22 days just to try to keep it fresh. We talk about the second half being stale. All of our negative volume is in the second half. One of those days is about to drop. So volume has an impact on how strong the market is moving, staying negative until the sellers start to break out again. Well, if you're negative until the sellers break out, how do you get more negative? Right? So right now, if we're saying there's nobody, Sandy says neutral. I'm gonna agree with that. Right? It's quite a neutral market at the present. I want that when volume does, I want it to inform me. So if in the next week there's above average volume on a buying day or on a selling day, it's going to kick me positive or it's going to kick me negative, and that's going to inform my score going forward. But right now, I don't want this to have an impact on my score because it's not giving me any information that I think is meaningful. That's it. That's the explanation for me. Okay, questions, comments, concerns. That is the first half. Let's open this back up. Graylin, how are you feeling about your market posture process now? Do you feel like it's coming together? Do you feel like the videos are helpful? I know that the others here have been in a little longer, so from your perspective, being a little newer to the group, would love for you to share your insight on this cornerstone routine that we go through that sort of helps us. And again, remember, we don't believe we're building piece by piece. I love it. A little bit. That's how we eat elephants, right? That's how we eat elephants. Bite by bite. It feels overwhelming. Okay, that's how we climb mountains, step by step. Let's not eat elephants. I love it. I went to the zoo yesterday. It was amazing with my kids who are now in their 20s. So it was like a nostalgic event to go back. Oh, it was so fun. Anyway, the went today. Love it. Awesome. So let's move on. Yeah, let me know. Keep us posted. Here's the great thing that I find. And you'll find the same thing, I think, Raylan, when you're willing to share, you get a lot of support. It's a great group. Part of what we're trying to do inside of the Discord is provide that environment, that supportive environment that you guys can give to each other, right? Like we said, what's the context? Are we together in that gym shooting those free throws so it feels safe and comfortable? That's what we're looking for here. Okay, let's keep going. Yes, if you didn't see, if you didn't notice, Glenn is with us today. So as I told you, Glenn will be at tomorrow night's meet and greet on camera, showing you how handsome he is. We're all handsome coaches here. I don't know if you guys knew that. We only hire handsome coaches. It's a policy. And he will be teaching his first session on I'm setting expectations high, Glenn. On Tuesday, actually, he has an amazing presentation on trading psychology that will build and extend what we've been doing and what we did on Thursday. You do not want to miss that. So make sure you come. All right. Let's get to the next steps of the analysis. Major market. Major market. What's our thought process on major market? Major market, interestingly, has been more stable. So sector rotation has kind of flowed and it got really strong. I mean, we had like 5 core growth sectors in place, and then all of a sudden we had a sixth, and that was really strong. That was back in January, February, March, right? And that was part of what put us at that 6 level, 7 level market that we were like, oh, this is amazing. You can put your money anywhere and everything's working, right? And sector rotation never, or major market never got there. It got close, got to 0.75. It was good, but it never got to that highest score. And then on this retracement that we've had, the sector never dropped, or the major market never dropped below 0.5. That's where things have kind of held up. But within sector rotation, we have seen some adjustments in the money flow. So this part of the analysis, I find, has been interesting, right? But you'll notice we're already a 0.5 point higher, and we're already back into a 4. Okay, so let's do major market. Where are we? NASDAQ, top position. Obviously, part of what creates our bullishness is to see the NASDAQ in a leading position. Money flowing into technology. Russell looking handsome. The Russell is an interesting one. Right, we keep thinking, hey, if the market can't find its footing in regards to how it perceives monetary policy, the small caps are the ones that are going to suffer, and it never seems to happen. Okay, so here we see, though, small caps in a lagging position, but remember that this just sort of starts us. What we want to do is watch as we change the time frame. What does it show us regarding momentum? So let's drop it to 133. Okay, now remember, we're in the process of building out additional aspects of the Discord community. If you didn't notice, there are a couple of new channels where there will be links and resources for downloads and resources where you can download a blank trading plan template, download trade logs, etc. Where you can find the top 10 trading mistakes document, all the things that we use, where you can find these links. Where is the link for this that you can use? It's in there. All of that will be in there, so keep an eye out for that. And there will also be kind of a tour, a video tour that you can watch to make sure that you're comfortable where everything exists. Okay, now as we drop to 133, what did we notice? The NASDAQ is still up at the top, but guess who joined it at the top? The Russell. That's what we're talking about. The Russell's not down in a lagging position. Small caps have, from this time frame, remember what we've done is we've changed our starting basis point. Now we're back in November. Where is November relative to the context of the market? Well, November is after the September-October correction, right? We did have a correction then. It corrected, we got down, and what's happened since the bottom of that correction? This is more important to us now. We looked at the 200 because we wanted to understand the longer term. Great to see you, Glenn. We'll see you tomorrow night. Thanks for popping in. Glenn just said he would try to pop in, say hello, but he will be here for the full hour tomorrow night, and he will be presenting on trading psychology on Tuesday. Both of those 6:30 p.m. Tuesday will be here on the stage. The other Monday will be in the Market Watch meetups. So I hope you guys, we're really looking to get a big presence tomorrow night. We want our highest numbers at the cocktail hour yet. So put it on your calendar, pop in. Love to have you. Okay, as we move down to where we tend to score, what do we have? Oh, sorry. Nope, 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 nope. Let me go back one step. Let me go back one step and make note of this. Who is in the lagging position here? The Dow. The Dow. What does that tell us? Are people flocking into large caps because of their safety? No, we don't see that. We don't see that here. Sector rotation is a different story, which gives us a little bit of the mixed market that we do have. But here we don't see it yet. So let's drop on down to 66 days. Same thing. Who's leading? Now here the S&P is leading, which is always interesting, but there's not really an implication to that. It's not like I'm like, oh, what? The S&P's moved into a leading position? Well, we better blah 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 blah. No, there's nothing here. It's just an anomaly that, well, this context worked out that way. It doesn't typically last that long. But if you notice here, the Dow is still behind. The others are still leading. And when we drop to 22 days, it's the same as it was last week. It's the same as it was last week, which is what? Over the last 22 days, over the last month, and it was the same way last time too. I think I could probably back this up a little bit. Yeah, it's not going to work out that way. The Russell, more money is flowing into small caps. What would that lead us to believe? That the appetite for risk in the market right now is demonstrating confidence. Confidence that A, the fundamentals are holding steady, holding strong, and B, the Fed is getting closer to interest rate cuts. That's the only explanation for money flowing into small caps. There's nothing else that we can attribute that to, but we do attribute money flowing into small caps the same way we attribute money flowing into technology, and that is bullish, right? If investors are bullish, what do they want to do? They want to get their money working the best way they can. What grows the fastest in bullish markets? Technology, small caps, communication services, financials, these things that's where we're finding our best opportunities. This isn't like, oh, we're so surprised. This is exactly what we think. Do we make adjustments to market posture score based on macroeconomic news? And if so, can have significant, sometimes sudden impacts. Want to ensure posture score accurately reflects current market sentiment. Yes. So here's the thing. Remember that particularly, it's an amazing question. Thank you for asking. Particularly macroeconomic events. Remember, the markets is processing it before, during, after. It's just constant, right? So there will be an immediate reaction, and we often think, oh, it did this, and so now we respond this way. But if you go back and you look at our posture, and you look at like times, it feels, right? If you're the frog in that water and you're sitting there, someone turns the burner on and starts to heat up that water, all of a sudden you're like, oh, it's hot in here. It feels like all of a sudden, but it wasn't all of a sudden, right? It's just that the frog doesn't have the physiological capacity to recognize that environmental change. And that, unfortunately, is the same phenomenon with a lot of traders. They're like, in fact, I'll tell you what, we could go back. Maybe this would be an interesting one. I don't know if I could find my charts from then because we're getting far away now, but we could go back and I could actually probably recreate it. And we can go back to the pandemic, right? And we can go back where it got nasty. I mean, like nasty. And it felt like this just came out of nowhere. And I could demonstrate to you where if you look at all of the things that we look And we look at them. Why? Because we look for subtle shifts that start institutionally. Because if it doesn't hit an institutional ripple, it's not going to get to the market. Institutions are going to create these tremors and these things that we trade. And so, but if the institutions do get in, then it gets nasty. And if you go back and you're like, oh, okay, Scott, what did the VIX look like before the pandemic? Yeah, there was plenty of time. Plenty of time. Now, if you say, oh, Scott, so are you saying you took some puts and you wrote them all the way down? No. I wish I could say that. I wish I could. The first set of puts I had were amazing. Could they have been like way more amazing? Yeah, but I didn't hold on because nobody had any idea what was going on. It's like, you know, I don't know if you know anyone who's ever traded through a pandemic, but I didn't. So we were in uncharted waters and there was so many weird things happening. But what I will tell you is this: anytime you have weird things happening, all we can do is trust the underlying. Like, we're not looking at the superficial. We're digging a little bit underneath to understand these variables within the institutions, right? And when the market recovered very quickly coming out of the pandemic, you can see it and understand it using what we're trying to do here, right? And so what I tell you all the time is this: if you're reading about it on Yahoo, you're 2 or 3 weeks late, right? And I try to point that out as we go through. I try to go through it and say, look what they're talking about on Yahoo. We talked about that 2 weeks ago. We're already seeing this thing. And so to answer your question, Phil, there's an old quote from a trader named Bernard Baruch. He said, "Show me the chart and I'll tell you the news." We definitely want to keep our eye on the economics and understand when is there something that might have some kind of a binomial effect, right, on the market, but it's already typically priced in, and then it's the final reaction. And sometimes people think the final reaction is like, oh, but we've already been preparing for it. That's what we're trying to do. I hope that helps. I hope that's the gives you a sense of what we're looking to do here. Because when we look at the Titanic, right, it's always going to be slow, and we can always move a little bit faster. It's just it doesn't feel like it sometimes. So okay. So what's my score? I'm telling you, I'm like in a yapping mood today, you guys. Yeah, I'm raising my score up. The Dow is in a lagging position. The S&P, the Russell has moved back up into a leading position on the 66. It's also moved up there. Michael's. I'm in a yappy position, and Michael's feeling a little salty. He's like, "Yeah, you are. Wrap it up and let's finish business." I'm going to raise mine 1/4 point. Michael, what are you doing? 0.75. Do you guys agree? Mike, Sandy's cheering him on. Up 1/4 point. See, we're in the same place. All right, sector rotation. Let's get there. Let's do this. What are the sectors telling us? Tell me a story. Sectors. That's the great thing about the market. There's just stories being told. Stories of buyers and sellers, psychology, the market, the herd. Who's at the top? Communication services, technology, financials. Anytime you put those at the top, I'm going to like it. I'm going to be like, yeah, great. We can work with that. There's the market. Who's close? Industrials. Who's surging? Ooh, look at Sandy. She said it's a happy place, but for how long? Yeah, because look who's surging. Utilities. That's a little bit of a defensive. Well, that's something we've been keeping our eye on. We've got that group in there, and then down here we've got staples and discretionary. So kind of our consumer stocks down here. Okay, let's start to zoom in and see how is the momentum shifting. Financials and industrials. We have loved financials and industrials all year. I would say those two are the two sectors that I've traded the most this year. Let me know if you guys agree. When we come down, communication services. Obviously, I love Google. I love Meta. Technology, technology got shook, but has seemingly recovered. Who's down at the bottom? Oh, discretionary, right? Discretionary, a little bit out of favor, right? Okay. Let's go to the scoring time frame. This is concerning. Utilities at the top. So right now, we just raised our score saying, hey, small caps moved back into favor. That looks great. Then we come to sectors and we're like, whoa, this is a whole different landscape. And that's part of the uncertainty, right? Part of the uncertainty that we're feeling and experiencing in the market right now, which is causing us to contract our risk levels a little bit. Let's ease it up. If our expectations of the market have decreased, then our risk levels should decrease until we say I'm more confident about what the market's doing. Because, yeah, it could look. I mean, we just broke to new highs. That's always a bullish sign. But there are some concerns, like the fact that utilities is the strongest sector over the last 66 days, which is 3 months. And then what? Energy. So this is defensive and this is inflationary. And who's in third? Materials, which is what? Inflationary. Defensive, inflationary, inflationary. Financials, that's okay. And then we have staples, defensive. So this is not a great alignment here. Not a great alignment. I'm leaving mine. I would, if anything, I would consider dropping it, but I'm going to leave it at minus 0.25. That doesn't look great. That looks like it's trying to be more defensive. Let's go to 22. 22 is utilities. If I was like really on the fence, this would tell me to go ahead and drop it to minus 0.5. But I'm just going to leave it as is. I don't think it looks, I mean, we already had dropped it negative. So we only have financials and industrial. I'd see, well, no, because look at this. That's enough. I have financials and industrials, Stephen, I agree, but that's enough momentum for me now that technology is kind of back up, that I've got some chips, I've got some, right? So but there's still some concern. It's still minus 0.25. Right? So where's everybody else? I'm still at a negative on that one. Let me know what you're seeing there if you agree. Where's my chart? I'm still a negative on that. Okay, one more to go. And I have a feeling that the VIX is also going to raise up because it was quite the VIX. I'll tell you what, looking at the VIX as our institutional sentiment indicator, VIX is probably one of, like, if I was limited, if they're like, you can only have a couple of tools, this would be one of them, right? Best VIX post, well, it was very close to this one. We actually, I believe we've gotten into the 9s on the VIX historically. Let's go into the Wayback Machine just so you can see what I mean. Here's, right, you're like, ooh, 35 is high. Is it high? Are you sure? Do you think it will stay high when I drop my chart to 5 years? Context matters. That's what we said was high. Look at that. That's pandemic VIX, right? That's pandemic VIX. And you said, Scott, did it escalate? Sure did. Higher low here, second higher low here. 2 in a row of our signals that we look for. Clearly escalation was developing, right? So I promise you this, we knew about it. Let's go farther back in time. Let's go back 10 years. And, ooh, we got to the eights. 2017 was an amazing year. That's what an amazing VIX looks like if you want to know contextually. That's a very bullish year right there. 2019 was pretty bullish actually. So it came down from here and then it was pretty good. And when it spiked up, its highs were 20. When we spike and only get to 20, which is kind of where we are now, that's good. That's a great market. Yeah, we're low. So for me, oops, let me go back in. For me, this is definitely a lower low. So let's get the score and raise it up. Actually, oh goodness. We were, I missed something here. One, and then we were, okay, so we haven't raised it again. So I would actually say that this is a lower low. Yeah, we got both last week. This was a lower low. We popped a little bit and then we lower low. No, excuse me, I'm sorry, lower high. This is a lower high. Let me drop because I'm not speaking well. We had this lower low, which we did score, and this lower high, which we did score. Now we have this lower low. That's 0.25 more, right? And now we have this lower low. That's 0.25 more. So, okay, let us go back in and put that score in 1.5. Wow. Okay. So I think I thought we would go up about 0.75, a full 1.25. I'm at a 5 again. That's pretty bullish. That's pretty bullish. It's telling me that, hey, Scott, here's what it's telling me. Here's the questions it's telling me to ask myself. So did I get overly cautious of a repeat correction like the one we had in September and October? Now, at the end of the day, overly cautious just means I took less risk. So all that means is, did I potentially cost myself a little bit of opportunity on this last upswing because I could have been more bullish than I was? I'm not going to dwell on that. That's not a soul searching question. I was positive. I could have been more positive, but I feel comfortable with that. Like if things got nasty, I was ready. I would have actually been profitable if things got nasty, but didn't. It didn't. Okay. So now the question is, do I need to get a little bit more bullish? Well, you lost my voice. Can you hear me right now? Uh-oh. Can you hear me now? Testing. What is going on? Testing. Testing. Can you hear me now? It's a different microphone. I don't know what happened to my microphone. It says it's working, but it's not. Can you guys hear me? It's probably a lower quality. Yeah, let me see if I can switch to the other one again. Testing, testing. How about now? Did we get it back on? And is it a better quality? Good. Okay. I don't know what happened there. Like the light's on the whole time. Okay. What did I miss? Where was I when it cut off? Risk? Feeling good about how we're trading relative to market conditions? Things are all over the place, so caution is called for. Yes. I mean, I think caution was called for. My question is, and I'm open to what you guys think about how you did, how you feel like we did as a group in seeing the market Did we get too cautious? Did we get too cautious? Should we have been more bullish as things turned? I mean, we never dropped below a 2.75. Like our posture never dropped below bullish. It got less bullish. But there was definitely for me a pattern that I didn't like, and so that's why I kept my risk a little bit lower. Well, at the market being a 5, now I'm not going to be as conservative. That's the point, right? That's the point, is if we can be as objective as possible analyzing the market, and then we come to this conclusion, hopefully this helps to kind of eliminate us connecting emotionally to our opinion and our biases within the market, and just saying, hey, look, things are empirically, we can see it across these multiple analyses, more bullish. So on this next bout, now remember, this is our market posture. This doesn't mean I'm a 5, so tomorrow I can go slap on 8 new bullish trades. Market posture is overall. Trading posture is day to day. What is your trading posture? You'll notice as we did our market posture, we don't talk about support and resistance. Support and resistance helps to establish trend. But when we assess trend, we're measuring it to assess strength. We're not saying, oh, we're at resistance. It doesn't matter if you're at resistance or at support. What matters is the trend. When we move to trading posture, which is what am I going to do tomorrow? Now support and resistance absolutely matters for are we going to put a trade on, right? So this just sort of gives us our overarching, how are we considering this market? Now we go to our trading posture and we say, what do we see here? I see the market at resistance, overextended after a period of time where 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, where 8 out of 11 days were higher, and we moved higher without any discernible volume, which I'm not overly concerned about, but it hasn't broken out. And so, yes, I have concerns that you're going to not find good reward to risk ratios and ability to establish parameters in a trade when the market is at resistance. Right now, we should be tying up trades, closing trades, tightening stops, unwinding bullish trades that we hopefully put on back here after what? A consolidation to a higher low. We had a consolidation. We popped up, we pulled back. Now this, empirically, with this, is a higher low. That it is what it is. We put bullish trades on, right? We talked about bullish trades on this turn. The problem is it wasn't here. It was on the turn. So, right, I point at the low as that's the lower low, but the signal is not going to come until later. So it's not like we're trying to call the bottom, but that still is a great bullish opportunity. And yeah, did I take a little off early because of my market posture? I did. That's sort of where I'm like, hey, could I have held a little longer? I held some longer. Could I have held more longer? We always can go back and ask those questions. And those are the small little minute adjustments. But at this point now, I can't get reward to risk without getting this, so that I get another one of these where I can say, great, now I can put a stop here, a target here, and now I have 2 to 1, 3 to 1. Patience. Got to be patient. We can't just I'm bullish, slap on some trades. It's not going to work that way. So we gotta make sure we understand the context of what we have. Questions, comments, concerns? I gotta fly. We're already 3 minutes over, so I'm gonna fly through the watch list. And 2 things. This week we are on section 5, routines. We're already on the second half of the plan. We are working on routines. Your daily routine. What do you do before market, during market, after market, your weekly routine, monthly routine? Write it down. When, how long, what action steps, and in what order. Those are the 4 things you want. So before market open, when? Mine is at 6:45 a.m., last 15 minutes. Right, and then what do? I check the futures. I check my trades. And I go through this checklist. So that's what we should have, a number of these checklists. That's what we're working on this week. There's videos for it. There's other things for it. Let's hit the watch list real fast. I appreciate your patience with me today. And let's get a sense of what looks good. So I love Apple. Look at Apple. It broke out, made a higher high, but I'm not going to trade it at the higher high. I need to wait for the pullback. I need to wait for an opportunity. It's on my list. So if this week we get 2, 3, 4 days of pullback, setups are going to start popping up left and right. ACB, it's moving. It gave a signal, but it's not going very far yet. We'll see. AIG, I love. We talked about AIG. That was on our list. That one's turned. AMD, there's been some chip stocks that stayed good, and now AMD has joined them. So I like chips again. I'm bullish on chips. You'll see when we get to them. Amazon, I've already said this is one that I'm looking for early this week for a bullish trade on the alerts. Looks fantastic. Nice strong trend. Just had a higher high. We're pulling back, maintaining above the 50. No sellers. The one day we had big volume was a doji where the sellers tried and the buyers pushed it right back up. This looks great. AXP, I just need a pullback, but I'm bullish on that, right?
This is a reminder.
Okay, let's see. Sorry, my Alexa's talking to me. Boeing, not yet for me. Bank of America, bullish. So I'm bullish on financials. We've already said that. This is where we've had some amazing trades, is in financials, but not now. I need a pullback. It's overextended. There's nothing for us here. Party's over. Cops are on their way. Citigroup, overextended. Caterpillar. Oh, yeah. What do we have? Industrials, we like. Break the consolidation, higher high. Now what? Anything in here makes this potentially viable for us. And as we watch this, that's one as well on the list. We have some things that are showing nice signs. Chipotle. Chipotle looks pretty good. It's just you can't trade it. It's expensive. I mean, I guess you could. One share will cost you $3,000. The options are off the charts expensive, even with low volatility. But remember, it's going through a 50-to-1 split, so that's not long. That's in June, about a month from now. CNM pulling back. I like it, but it needs to finish pulling back. Oil under the 50. We love to see that. We would like to see it stay there. That helps. Costco. I like Costco. I would trade it on a pullback, but I just don't think there's time before earnings now. CRBG pulling back. That's a weird one. I don't know what we would do with that one. Delta setting up. Nice strong trend, higher high. Now we're seeing a little bit of ease, and it's going to pull back and give us a trade. Now, when it pulls back, you can see it pulled back here, went sideways for a little bit. So it's never easy. It's just that we're looking for very specific patterns here. Dow looks a little overextended. FCX. So a lot of these things you'll notice are just overextended. Oh, I liked this one, and I took it, and so Michael said, or no, who said it? Greg said my timing's off. My timing, I thought it was good timing. Looked great. Bam, failed. Okay, close it. I'll tell you this. I was gonna do an alert on this one, and then I didn't, and now I'm like, whoo! But I did trade it. Okay, gold. I've decided the jinx is still there. I kept convincing myself that my GE jinx was no, it's not GE, it's GE Aerospace. It's a different company. And the market's like, nope, jinx is still there. So yeah, we'll keep watching it, but I'm not going to trade it anymore. Trading jinxes are real. If you think that's not a real thing, just wait. Google, I love, but it needs to pull back. IWM, strength in small caps, but it's overextended. You'll notice how many times we're saying, but it's overextended, but it needs a pullback, but it's at resistance. However you want to say it, we're saying the same thing. KBH looks great, but where is it? Overextended at resistance. Be patient. You know, can you run and jump onto a fast-moving train? Yeah, maybe you'll catch it. If you miss it, it's dangerous. We would rather the train slow down a little bit. Let us jump on before it speeds up again. Otherwise, don't jump on the train. Meta, I think Meta's done enough. I mean, I know it's like flirting with the 50. It's touched the underside of this old resistance, but if it pulls back to a higher low, especially like right at this level here, 450, I would trade it. I like Meta. Microsoft, I like, but it has to pull back. Micron already pulling back. So you can see there's a lot of promise in technology, but we can't trade the sign that was just given that we're now saying indicates there's more strength in technology, right? And that's what a lot of people do. They're like, oh, look, all this strength. And then they jump in and then it pulls back and they're like, oh man, I missed it. And then it turns and we can't keep chasing our tail. Relax, let it pull back. Here we are waiting for it. It'll come. Netflix. Yeah, that one's iffy. I mean, it looks like it's trying to turn from this weird little consolidation, but we're so near these highs. I'm not convinced on that yet, to be honest. Nvidia pulling back, but it's got earnings, and that's a big report this week. Remember, that's not on our earnings calendar. There's not a lot on our on our economic calendar, but that's a big report. We've got to be paying attention to that this week. For technology and chips in particular, Picard still down. Qs. I mean, look, if you don't look at this and say, yeah, Scott, you're right, technology has reemerged. I don't know what you want to see to be convinced that it has reemerged. The last time it looked like this was when? Right over around here. It reemerged and then it kind of pulled back. When was that? After November, right? Right before we had this nice bullish 3-month period. So yeah, we should be ready if that's what's coming. RTX is another one that I like a lot, and that is on the list for this week. That is a industrial. One quick word of clarification. Defensive. This is a defense stock, right? They are a defense company, which is not to be confused with defensive orientation or mindset, right? Like that moving money into utilities is defensive or the Dow is defensive. It's a defensive strategy. Defense stocks are industrial stocks. So, just make sure we remember that. And I like this one. Look at that trend. Beautiful. Higher high, pulling back, setting up, ready for us to maybe have a bite. SPY looks a little oversold, pulling back. TSM looks a little oversold. The dollar. So this is key for us. If the dollar breaks this consolidation to the upside, then I'm back into like, whoa, what's going on mode. If we can fall below the 50 and then test it, I'm going to be more bullish. We don't score this, but this is important to us. Remember, go back and look at the dollar in September and October if you don't know why I'm saying that. The VIX looks great, lower low. We'll see what this brings. If you're carrying a lot of bullish trades, could you think about a hedge even though there's not a hedge signal? Yeah, hedge signals are automatic, but hedges, if you've got a good amount of bullish trades and you're like, man, I really like to make sure that if this market all of a sudden got punched in the mouth, like Phil said, sometimes things can really feel abrupt. It's a cheap hedge right now, right? It can give you some great protection that if things start to fall apart, it would, move like that. VRT, a couple more things and then we'll wrap this up. Sorry for the delay. Bullish, pulling back. Bullish, pulling back. Sideways, I'm not convinced. Same with, oh, look at Walmart. Walmart smashed up on its earnings. On a pullback, I would say Walmart's taken my place of Costco because we're through earnings now. Basic materials, a little stronger than we would like, but communication services strongly, convincingly back above the 50. Energy is starting to show some strength, and we don't like that because that means inflation still rampant. But financials looks good, industrials looks good, technology looks good. There's some defensiveness in staples and some defensiveness in utilities. Here's what I would say. Still strong, increasingly strong, but there are just a couple of levels of concern that still exist, right? A couple of mechanisms of concern that still exist for me that I'm gonna say more bullish risk on this next bullish window. So if we get a pullback this week, I'm gonna take more bullish trades than I did last time. But I still have like just the back of my mind. I want to see a couple more things play itself out. Can you hedge with more defensive stocks such as energy and utilities? Yes, absolutely, right? If you have concern, I mean, think about this, Greg, is if you went back to when we first, saw our score decline more abruptly, let's say April 14th, April 21st. And if you go back here to like April 14th, right here, we hadn't seen it much yet. And then you go to April 21st and you're like, it's still, if you had said, you know what, I don't like that we've dropped, I'm just going to take a bullish trade in utilities, that's up 10% from there. I like hedge. I'm more of, as a trader, I like hedging with puts, but now it's like, yeah, in hindsight, it looks like that would have been fantastic as an idea, right? Same thing with the defensive. I'm like, yeah, you sure could. Look, it would have worked out great. And Greg's like, oh, Scott, maybe you should have said that. I really don't tend to hedge that way. I mean, I look for it, but I really hate trading utilities. And Staples a little better, but I don't like trading Staples. I don't know, maybe this is my same thing, right? Right around this area, boom. Not as much. This one's a little behind. We've said that we've noticed utilities more so recently, but yeah, that does give you can see how that sort of shifted into a better place while the rest of the market's been a little bit more iffy. Anyway, great conversation, great questions. Let's try to put a little time in, everyone, this week into Discord, into our trading plans. Have some comments, some questions. Let's try to join Glenn tomorrow, and I will try to be there as well. I'm not sure, but Glenn said, "Great, I want to meet everybody." So you'll have a chance to meet him, ask him some questions, find out a little bit about him, and get to hear a different voice than mine. He'll also be with us on Tuesday, so looking forward to him becoming a much more integral part of the group. It's good to see everyone. I hope you have a wonderful rest of your Sunday and a great week, and I'll see you soon. As always, happy trading.